give more returns. Get more security and more interest on your fixed deposits from Sri Lanka's largest finance company, LMDtv Finance.
The key to quality and efficiency. Be a jewel. Professionalism is the jewel in the corporate crown.
Refresh Sri Lanka for a civic-minded society in association with 99X. LMD, the voice of business.
Hello and welcome to LMDtv. Tonight on the forum, we're zooming in on the banking sector and its solutions to contain Sri Lanka's economic crisis. And with us, we have the chairman of the Bank of Ceylon, President's Counsel, Ronald Perera. It's very nice to have you on the show, sir.
Thank you very much. Thank you.
To start off our conversation, we're still in the middle of the crisis, and the banking sector is expected to play a very active role in the recovery process. What are your views on this expectation? Is it fair?
Yes, now the banking sector has been playing a key role in the economy in all sectors because the economy depends on the money supply and the banks are in the center of financial stability. Therefore, banks encounter significant challenges during a crisis, especially in an economic contraction situation. Now, we know for the past 2 or 3 years, we have been hit by COVID, then economic, economic instability, where raging inflation, foreign exchange rates rising to new heights, all that, plus, of course, we had people spilling onto the roads, all that created a lot of uncertainty and a lot of crisis was brought in here. Now, we think we have come out of the really dark area now. We find so many positive things we can say. Yes, the negatives are still there, but I think the banking sector still has a very, very active role in overcoming these challenges. Because and also you must remember that Bank of Ceylon as a state bank, we have greater responsibility to support the government's decisions in reviving the economy. Both the corporate sector and the public expect the contribution of the banking sector during economic crisis. Hence, Bank of Ceylon has restructured existing credit facilities, rearranged working capital loans at concessionary rates for troubled businesses. Also, the bank has set up a separate revival unit to revive businesses which have really encountered hard times and were on the verge of having their their assets or their whatever they pledged to the bank being sold. So we have restructured that also. About 100 businesses have been revived and they are now in the performing side. So we have done all that. Plus, we have also provided a range of deposit products at competitively high rates to encourage the public to save money even in these formal financial system during these bad times.
And in your view, what solutions will the banking sector be able to offer to combat the forex crisis that we're having at the moment? Do you see any light at the end of the tunnel? And if so, how soon can we see it?
If you look at the forex inflows and outflows of the country and the exchange rate, I would say that most of the concerns with regard to forex is now more or less sorted out, and we have seen excess forex supply in the market, and that is the main reason for the rupee appreciating against foreign currencies. I think the dollar was somewhere close to 365, 370, and is now down to the 290s. So it has impacted favorably for the rupee. But still, that situation is because the economy is not yet fully open for imports, and as well as external debt restructuring is yet to be completed. With that, there may be a pressure for the forex, but as a part of the initiatives taken by the government, we have seen substantial increase in workers' remittances and the tourism sector. Workers' remittances, I can say truthfully, Bank of Ceylon accounts for 40 to 50% of the workers' remittances from wherever the Sri Lankans are living and working. Middle East, some countries of Europe, the Near and Far East, Japan, Korea, where we get the bulk of the remittances. As I said, 40 to 50% comes through the Bank of Ceylon system. So we have a healthy uh, foreign exchange deposit base, and that is happening across the board. Other banks too get more remittances, workers' remittances. That is why uh, that is one of the main reasons why the foreign exchange situation has improved. Then tourism also has begun to pick up. That is also another reason. And of course, the third, and I think still the most important reason in my view, imports have not been fully permitted. Once the imports are permitted, I saw a gazette notification that they will be permitting imports on some 400 products soon. Once that starts, I think we will again see how the situation is. But I don't think the situation will be as bad as earlier, because for the earlier two reasons, workers' remittances and tourism has increased our foreign exchange situation. Actually, if you could get the pre-COVID levels, where tourism earnings recorded 4.4 billion US dollars, and tourist arrivals were almost 2.4 million in 2018, and also workers' remittances were recorded that year at 7 billion US dollars, then that will be a huge support for the country. I think we are in the recovery phase, and with careful action and proactive strategies, we will be able to manage the most valuable forex for the country's essential items.
Mr. Perera, when it comes to interest rates, can we expect them to come down this year? What are your predictions for the interest rates in the coming months?
Now, I wish I get paid for every time I'm asked this question. Everyone wants to know when the interest rates are coming down. So that is a difficult question. But looking at the past 4 or 5 months, I took over as chairman middle of January this year. At that time, AWPLR was going around 28 to 29%, and all loans were above 30% interest. Now, AWPLR is down to 21.2%, and there is a policy rate has been reduced by 250 basis points by the central bank a few days ago. So we expect the AWPLR to get to 18 to 20% in the next quarter, and it will start going down even further in the next following quarter, third quarter. And I think the fixed deposit rates also will drop substantially. So I think all in all, we are expecting lower interest rates as the time goes on, and this easing of the uh, monetary control by central bank and reduction of the policy rate. And once the interest rates drop, I expect the corporate sector to start borrowing more for their projects, and that will have a cascading effect on employment and also consumption, because at the moment we find there are so many sectors which are not particularly active. So once the interest rates start going down, they will get active, and we will see the economy as a whole picking up.
So, Mr. Perera, as you said, when corporates do start borrowing, what can banks do to help them and to facilitate this further?
We have you must understand that credit has been on a downward trend since about June 2022. One main reason was the high interest rates. Now, once the interest rates start stabilizing and coming down, I'm sure uh, the the corporate sector will uh, start borrowing more, because then the opportunities will be available for them. But of course, banks have to be very cautious. We are just coming out of this dark period. As you said, the tunnel, we are just seeing light at the end of the tunnel when we are coming out of it. So we have to be very cautious about the use of these funds because we have to manage our liquidity and our uh, funds, and we do not want people to use it for development purposes and investment purposes rather than consumption. As consumption, once consumption increases, again inflation will be a big problem. At the moment, all these things are under control, so it's a fine balancing act that we have to do. Then still we have to make funding available for manufacturing, construction, tourism, and also very crucial that we give SME, small and medium enterprises, for development, because that will result in developing the sector and also uh, developing the economy by not only by their manufacturing processes but by increasing employment. Then if you look at the risk side, which we have to look at in the banking sector in performance in assets, we have to consider the sector exposure, especially in construction, manufacturing. Banks should be more vigilant when they grow their portfolios. We cannot lend at will. It has to be on a controlled and analyzed position. Next, we also have to see, we have seen high exposure to credit risk, where higher stage in stage 3 loans to total loans were experienced, which we are still grappling with those stage 3 loans which are in a bad way or non-performing. Therefore, all banks should have proper mitigation mechanisms in order to arrest the situation. Also, I hope that with the recovery of the economy, the borrowers will be able to service their facilities, and the bank should be ready to support their businesses. Especially, the banks need to have their own tools such as rescheduling, restructuring in order to support their customers. Now, Bank of Ceylon is the #1 bank in Sri Lanka. We have established a specialized unit to support businesses and revival of such businesses when we are expanding our operations in this business revival unit.
When looking at domestic debt restructuring, despite the central bank really assuring local bankers that their profits will be protected from any adverse impact of this, we're still seeing a lot of doubt, a lot of uncertainty, and it's even impacting shares of listed banks. In your view, what is the situation like? Is there enough transparency and clarity regarding this whole domestic debt restructuring process?
Domestic debt restructuring has now become a bad word because everyone says domestic debt restructuring, it is impacting the share market and even businesses because people are not sure of what is happening. I think that the call is on the government. IMF and the financial institutions can lay their conditions, and government has to work the figures and look after the entire country. Now, we have also met with the necessary people, and we have been assured that there will be a domestic debt restructuring, but it will not have a serious effect on any bank, the banking sector, because this is a thing that has to be done and which has to be done without much harm to the system. So yes, we are expecting we are expecting the worst, but we know that we will be able to pull through because the government also has to support the banking sector because that is a vitally important sector to run the economy.
It's time to take a short break. When we return, we'll resume our conversation around the banking sector.
Display your brand message on digital screens at prime locations. The largest digital advertising network in Sri Lanka. Emerging Media.
You're mobile, and so are we.
Gets me going.
Grab the Lite 87 app at the Apple App Store or Google Play now.
87.8 and 87.6 island-wide. Lite 87.
Welcome back to the show. We're talking to the chairman of Bank of Ceylon, President's Counsel, Ronald C. Perera. Banks are always considered the facilitators of economic activity. And when we're looking at the private sector of Sri Lanka, which is, of course, considered to be the engine of economic growth, how are banks facilitating companies right now against the backdrop of the crisis?
Financial services and banks are essential for the growth of any sector. Therefore, the bank should ensure that financial services are widened and broad-based and tailor-made financial solutions provided to the private sector so that the private sector can operate at a high level of efficiency. Access to finance can contribute to the growth process, such as promoting private sector entrepreneurship, motivation, and the process of advanced technology adoption. Hence, banks are supporting the private sector in several ways. We provide required financial services in a timely manner at attractive interest rates. And as the rates are coming down, they become more attractive. We support the private sector who are looking for diversified investment opportunities. Then awareness of tax trends, risks associated with larger projects, interest rate changes, that also we handle. Then we facilitate cash flow based project funding. Now, during the height of the crisis, the banks were going beyond mere banking activities and have supported them to revive even managing their cash flows and giving necessary financial advisory services. As I referred to earlier about our revival unit, we have really looked after these dozens of enterprises which were in a bad way, and we have put them back on their feet, and they are now great contributors to the economy of the country.
Thank you for the response, Mr. Perera. In all this economic recovery process, there's a growing concern about the fate of SMEs, which, of course, is the biggest sector when you take Sri Lankan companies. We aren't really seeing much being done by the government and, of course, by the banking sector to support these SMEs, especially in terms of their cash flow management. Why do you think that is? And in your view, how should the banking sector really facilitate and protect SMEs?
That's a very interesting question because the development of any economy, especially economy like Sri Lanka, depends on the active contribution of the micro and the small and medium enterprises. This is a vital sector of the economy. And these sectors, micro and small and medium enterprises, are a major source for generating employment, creating wealth, and alleviating poverty in the rural regions of the country. Especially in countries like Sri Lanka, to move forward, these sectors should be empowered with the required infrastructure facilities. We also take pride in providing finances to women entrepreneurs and youth entrepreneurs because these are also vital sectors who can contribute to the development of the economy. Now, the government and the banking sector have taken a number of measures to develop the SME sectors of the country. The government, through the Ministry of Finance and the Central Bank, has provided funds to the banking sector to grant loans to the SME sector at concessionary rates, which is a mandatory requirement for the development of the economy. Since the Easter Sunday attacks and throughout the COVID-19 pandemic until the economic crisis, the sector has taken many initiatives for SME sector borrowers, including debt moratorium, debt restructuring, and special loan facilities with attractive interest rates, while preventing undue stress on the banking sector stability. With the above initiatives which I highlighted, the SMEs were able to sustain their businesses and continue their business activities smoothly. In a way, this provision helped banks curtail transferring such credit facilities granted to SMEs from performing to non-performing sectors. So that helped us also to manage our finances. And the banks have provided funds at a concessionary rate of interest to meet their working capital requirements so that SMEs can manage their business operations at a moderate level. Banks are also implementing refinance loan schemes targeting SMEs to meet their financial assistance for investment and expansion purposes at a lower interest rate compared to the existing market rate. Further credit facilities granted to the SME sector can be restructured by extending the repayment period of loans while matching their present cash flows. That is an important factor. to match their cash flows so that they will not fall into arrears. Also, BOC has established a SME circle which supports and serves especially the SME customers, and this has been a very successful uh, plan that we have executed.
And what about the general public? How challenging and necessary is it for banks right now to cater to all these changing dynamics of customer needs, especially during times like this?
In this situation, we have to maintain the liquidity position of the bank while maintaining customer service. This was, of course, very challenging, but we were able to achieve this challenge by answering the requirements even throughout these hard times. During the economic crisis periods, Sri Lankan banks faced the issue of deposits moving out from their banks. This was a serious situation for all the banks because our customers needed money to run their livelihoods. Then, as a one solution to this, the Bank of Ceylon pioneered to introduce products that change the framework of deposit schemes in the banks of Sri Lanka. These included 100-day deposits, 200-day deposits, 400-day deposits, BOC Relax, etc. Our example was followed by many other competitor banks, and similar products were also introduced by them. These types of products with higher interest rates encourage the general public to save some money at least in the formal system. Also, during the economic crisis, customer relationship was improved via many customer get-togethers conducted under the name of Tea with BOC. This was a new concept, and from the beginning of this year, 356 programs were conducted with the participation of almost 4,000 customers all across our branch network. By these mini customer gatherings, we as a bank could closely listen to the requirements of our customers and could further develop our relationship with them. Even during this crisis period, we as a bank could further increase the quality of services provided to customers through a series of training conducted for staff across the branch network. This is something I have been endeavoring to do for a long time to ensure that the customer leaves the bank satisfied. I must also say that at a time when customers are moving away from some banks, we are very confident in retaining our customer base and could successfully move ahead with action and attitude to attract new customers to further stabilize the bank. And as the number one bank in Sri Lanka, we have the most wide network of touch points with a figure of almost 2,200 touch points. We have almost 650 ATMs, about 160 CDMs, cash deposit machines, and 660 odd cash recycling machines, and we have 652 branches. We have 10 branches on wheels and 15 for the SME sector. With this level of a strong unified network and also with our digitalized products, we have the leading strength to reach our customers in greater magnitude, unparalleled to our competitors, and thereby to facilitate our customers in their numerous needs, especially during economically challenging times. Also, we have introduced novel concepts such as foreign circle, SME circle, which I referred to earlier, and export circle to cater to the varied needs of customers in that particular area of business.
Ms. Perera, in one of your previous responses, you mentioned that banks have to be cautious about sustaining their own operations. Now, when we're looking at the next 6 months, what will it look like for Sri Lanka's banking sector, especially in terms of their own performance and their growth potential?
Now we have looked into this, and this is more or less looking into the crystal ball and trying to predict the future. But our research and development division has gone into this in detail, and they have reported that the interest rates will have now started to decline, and the reduction in policy rates in June 2023. We expect the total assets and loans and advances to grow in the next 6 months, marginally. We expect demand on private sector loans backed by the increased economic activities. Then total deposits in the sector, which reduced in the first quarter of 2023 compared to the year 2022, is expected to have a marginal growth and expect to be around the value in the year 2022. The profitability sector will decline in the coming months, where the industry net interest margin would be at approximately 3.2 to 3.4% levels. This is mainly due to the high interest costs with deposit mismatches and lower interest income. Even though credit growth may start, it is priced at a lower rate compared to fixed deposits. This is the biggest issue we have, because the cost of funds is high because of the deposits we have taken earlier.
My next question to you is revolved around Refresh Sri Lanka, the campaign that we launched to encourage a mindset change and create a more civic-minded society in Sri Lanka. In your view, what are the focus areas that we should really prioritize to ensure that the country's banking sector really upholds civic-mindedness, especially now?
This is a very timely initiative launched by LMD, and where as a country we have learned a lot of lessons through the past experiences, including the Easter Sunday bombings, COVID-19 pandemic, followed by economic crisis. In general, the banking sector of Sri Lanka upholds rules and regulations that have been put forward by the central bank and standardized practices, and it is highly regulated industry. In maintaining good governance and sustainable growth is a collaborative effort of all the participants of the industry. The banking industry has a strong inclination on the economic health of the country in determining to participate to uplift special sectors such as SME and micro businesses. Being one of the major participants in the country's GDP, banking sector ensures it maintains sustainable growth. So going beyond normal industry practices, it is also involved and initiating in investing responsibly in renewable energy projects, environmental preservation, and uplifting livelihood of the people of Sri Lanka. And we expect people to be civic-minded and to get together to build up the country as a whole, forgetting all narrow prejudices. This is something that I think LMD has thought of and started this initiative, and we also support this fully.
Mr. Perera, it's been a delightful conversation with you, but before we let you go, any closing thoughts that you'd like to share with our audience today?
Despite the many challenges in the economy, the bank conducted itself as a responsible corporate citizen in the country. We have been continuously delivering value to all our stakeholders and has always operated in safeguarding the best interest of all the parties. Therefore, if all of us, including the government, the regulator, the business community, as well as the general public, work together as a nation, we will undoubtedly be able to revive the economy, develop the country, and reap its benefits.
Yes, it's definitely going to be a tough but hopefully rewarding journey.
Tough challenge, but we have to do it. We have no other way. We have to do it.
We've been talking to the chairman of Bank of Ceylon, President's Counsel, Ronald C. Perera. Thank you so much for joining us today, sir. It's been a delightful conversation with you.
Thank you for the questions. Thank you very much.
And thank you to all our viewers for joining us. Until next time, take care.
Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.